What happens to your health insurance if you leave or lose your job? You might have a number of options for comprehensive health insurance, even if you have a pre-existing medical condition like cancer. Because you might be eligible for more than one option, it's important to compare your options to determine which plan is best for you. COBRA is a federal law that allows eligible employees to keep their employer-sponsored health insurance plan after experiencing a qualifying event. Qualifying events can be losing your job or reducing your hours. It can also be when a young adult turns 26 and can no longer stay on a parent's plan. The amount of time you can keep COBRA depends on your qualifying event. For example, if you lose your job, COBRA will last up to 18 months. But if you get divorced, COBRA lasts up to 36 months. There are limited times when COBRA may end early or last longer. COBRA applies to private employers with 20 or more employees and state or local governments. Federal employees have similar protections under a different law. Most states also have a state COBRA law which covers smaller employers. One challenge with COBRA coverage is its cost. Usually, you pay 100% of what your employer was paying for your health plan, plus a 2% administrative fee. Even though it can be expensive, there may be benefits to choosing COBRA. For example, if you are in the middle of treatment with COBRA coverage, you wouldn't have to find a new plan with the same coverage for your doctors, hospitals, and prescription drugs. Also, if you have already met your annual deductible or out-of-pocket maximum, it may be less expensive to pay higher COBRA premiums, but not have any other out-of-pocket costs for the rest of the year. You should do the math to figure out which costs you less. If you need help paying your COBRA premiums, some states have a health insurance premium payment program. If you qualify for Medicaid in your state but have access to an employer plan like COBRA, Medicaid may pay the monthly premium for your COBRA plan. Instead of COBRA, you may want to buy a plan through a state health insurance marketplace found at healthcare.gov. Employees who are eligible for COBRA are also usually eligible for a 60-day special enrollment period to buy a new plan from a private health insurance company through the marketplace. There are benefits to buying plans through the marketplace. For example, marketplace plans have caps on the out-of-pocket maximum. You may also qualify for financial help based on your income level and household size. There are two types of financial help. A premium tax credit lowers your monthly premium to buy health insurance, and cost-sharing subsidies lower your out-of-pocket costs like co-payments. Plans sold in the marketplaces are for a calendar year, meaning they go from January 1st through December 31st. If you pick a plan mid-year, you will need to renew your plan or enroll in a new plan for the next year during the fall open enrollment period. In addition to COBRA and the marketplace, you may be eligible for a special enrollment period to move to another group plan through a spouse, or if you are under age 26, you may be able to move to a parent's plan. You may also be eligible for Medicaid in your state. Medicaid is a federal health insurance program, but the rules are different in each state. In some states, Medicaid is available for individuals with a low income level. In others, eligibility is based on having a low income level, low amount of assets, and meeting another category of eligibility, such as having a disability. You may also be eligible for Medicare. Medicare is a federal health insurance program that provides coverage for people 65 or older and who are eligible for Social Security retirement benefits. People who have collected Social Security disability insurance benefits for 24 months or have been diagnosed with end-stage renal disease or ALS. Picking the right health insurance plan can feel overwhelming, especially if you have more than one option. There are a few things to consider when picking a health insurance plan. What will the plan cost me? Are my healthcare providers and facilities included in the plan's network? Does the plan cover my prescription drugs and pharmacies I use? When comparing plans, it can be tempting to just choose the one with the lowest monthly premium. But to figure out how much the plan may actually cost you by the end of the year, you have to do some math. First, take the monthly premium and multiply it by 12, which is how much the plan will cost you for the whole year. Then, add the annual premium to the out-of-pocket maximum. Generally, this is the most that you will pay out of pocket for your medical care during the year. If you have a serious medical condition and see a doctor more often, then you are more likely to reach your out-of-pocket maximum. Choosing one of these options is like picking a lane to drive down. As you are comparing these options, remember, there are deadlines and rules that apply. In many cases, once you pick a lane, you have to stay in that lane for the rest of the year. For example, once you pick COBRA, you cannot switch to a marketplace plan until the next marketplace open enrollment period. The marketplace plan won't begin until January 1st, so if you want continuous coverage, you need to keep your COBRA plan until then. Choosing health insurance is not a one-time activity. You should review your options every year to make sure your plan meets your needs. A plan that met your needs in the past may not meet your needs in the future. Open enrollment is the time of the year that people can make plan changes. The dates for open enrollment depend on your type of health insurance. For more information about health insurance, visit triagecancer.org and cancerfinances.org.